Okay, everybody, hello, and welcome back to a brand new video where we're actually going to be studying price. And I did make it through episode 6 again, watching it again, and there's a few pointers and things that I'm going to bring into today's analysis, little jokes, stuff like that. Anyways, though, one of the expectations I made in the previous episode was that I wanted to see the volume of the candle, being the actual body, trade through that fair value gap as where we were. Okay, right here, very close to the high at the end of the day. We were just slightly in a premium. The bottom of this fair value gap here on the left side being equilibrium within this current leg. Okay, so now we are seeing price trade into a premium. Okay, we traded past or repainted the fair value gap right here, and we can expect a movement to this fair value gap above, or even maybe maybe trading even lower, sorry, to this inefficient delivery on the candle today, which is the 21st of February. I didn't say that. Usually I say it at the beginning. I can also expect it to maybe even go for this level of buy side liquidity here, but being that our bias is overall bearish, if we see that, then I think I'd be expecting a potential shift in market structure. But not to pick highs or anything. We're going to kind of look at where we are in the daily range. Obviously, today was a very bullish day. The very first thing I marked was this low here. This is the line and lows, but on the hourly time frame, again, we just kind of look at where we are in price. So here's yesterday's high right here. If you look actually on the right side, here, let me just get right here. So if you look on the right side where the cursor is, okay, that is the yesterday's high. Okay, this is what yesterday's high is marked as. If you're looking on the left, you can see I'm at the top of the wick of that candle. Okay, and so right there, we have that level of buy side liquidity, okay, being taken. Later on, it trades to the top of that fair value gap, taking out this other level of buy side liquidity. Okay, we do have a small retracement. Price then continues to make a new high and consolidates off for the day. Let's go ahead and just drop straight into the 15-minute time frame so we can elaborate on the different levels of liquidity that I had locked in on my chart. So the very first thing here, okay, I marked the London low, which I will expect to be retraded eventually, as we didn't see that level traded to. London high, the high of the London session being indicated by this line here. Okay, we had these relative equal highs, price traded above it. I did mark that just to kind of see what price was doing at that time. And then we had this very big displacement move. I marked this as a potential target when we move back into discount, where we could be looking to even take profit. Okay, so pretty much here we go. This green thing on the bottom here. Okay, is this? Oh, it's because we're on the hour. Or wait, I think I might have it messed up. Yeah, because I have it at 8 o'clock. All right. Well, anyways, disregard that. Okay. I mean to have it at 8:30. I guess I have it. Let me make sure. Okay, my things are a little off center here. Let's move that to. Sorry, I'm gonna have to adjust this, otherwise it's gonna drive me crazy. So I can actually make sense out of what I'm trying to explain here. One more. Okay. 4:30. Okay, now that the candles are aligned, we're going to start looking here. So I have these relative equal highs that are violated here, right at the open of the New York session or within our operating hours. Don't be confused that this right here is a setup or something I would have taken. It's not. It's annotations I have on my chart to help me get a better read on what I was doing. Okay, and then here during this time period of where I'm looking at. Okay, we don't trade this. This was during the lunch hour. I marked this level of buy side though, which was created before lunch. I marked this high that was created before lunch. As I said, the levels of sell side liquidity aren't so relevant besides understanding where price is and where it's going to continue to go. So there are some levels of sell side that's relevant, but again, we're looking at a lot of those buy side targets. Mainly because I don't feel in my current development that I'm confident enough to be a contrarian trader. So we're going to go ahead now and hop into our, we're going to hop into our bellwether, or sorry, that was our bellwether time frame. So with those levels of liquidity outlined, okay, we're going to now start looking for different setups, and we're going to look at things that had formed. So with that level of liquidity, this exclamation mark indicates a stop rate. Okay, so here in the morning, let me just see if I can get, okay. So here in the morning session, what we originally see is at opening, okay, we have this massive displacement move higher. Okay, and one thing ICT said in episode 6, which was that we can expect the move at 9:30 to be the opposite of what the move will be for the day. Now, he said that he made it very clear that that's not always the case, and it seems that that wasn't the case here, because if we look here at 9:30, we have this large displacement move upwards, creating these relative equal highs here. But it seems that the news drivers which we had, which are existing home sales and Treasury Secretary Yellen speaks, actually creates this manipulation or volatility in the market where it goes and creates this low. Okay, so after that, what I marked here was this swing low with the idea in my mind right here. Now, the reason I say in my mind or just idea, obviously this is something that is contrarian. When we are in a premium, we're not looking to be selling, at least not at this time, and I'm not picking highs or anything like that. So anyways, okay, because we pretty much just barely got into a premium. So anyways, price continues trading lower, trades below, okay, these previous lows or these relative equal lows, takes that sell side. Okay, we have a retracement and repainting this fair value gap, which becomes more clear on lower time frames. Okay, we have this low that forms, and then we have again another a stop rate. Okay, now this all happens outside of operating hours. Obviously, the last of our operating hours are at 11:30. What's important here is the sell side objectives that are being taken, okay, and inducing or creating liquidity in the marketplace for people who are not expecting this larger move. Okay, but me, I know that we just moved into a premium, and so I'm going to kind of explain the setup that I saw, and it's going to become more clear when we get onto these lower time frames. So the 3-minute doesn't really provide much clarity on what I'm talking about, but here's that initial setup here. And again, the reason, not only is it not the kind of setup that I'm essentially looking for, okay, it's also the fact that right here, okay, and here, let's also do this. All right, right here, this is 11:30 that it retrades to the fair value gap or imbalance that I had outlined. Okay, boom. So I marked the current price leg from this high to this low, and what we see is that when price traded below here, we were in a discount. So everything below this 50% level right here is in a discount. And so with this, I wouldn't be looking to sell right here. Is essentially the point I'm making. Okay, that just doesn't make sense. Now, as far as PM session setups, we're gonna go ahead and drop into the 2-minute. Okay, this is what I saw in PM, which on the other time frames, even here, okay, it's still not very clear, and we're on the 2-minute. I'll show what I'm explaining here with this setup, or the value that I see in this setup. I'll explain that here in just a moment. But let's do something first here. We're going to do the same thing with the fib. So we'll mark it from this low. This high here. Okay. So at lunch, the level of sell side liquidity is taken. We have the stop rate. After lunch, this high forms. Retracement. This high forms. Trades higher. This creates our idea, not entry. Okay, idea, not entry. Okay, this is still below equilibrium. Boom, what do we have? This displacement move right here. Okay, we have this stop rate on buy side, and soon after, price trades into a discount. This level that's marked here, this swing high, will become more clear on the 1-minute time frame. Okay, however, this level here, all right, is in a discount. Okay. Displacement, retrades, lower. This happened. Sorry, I lost my train of thought and I just ended up saying it wasn't a discount. What I actually meant to say was this was at 12:58, so it was outside of our operating hours. I just lost my train of thought. I was trying to keep going, but anyways, here that level of buy side liquidity was taken, trades lower, and then goes to the high that was formed earlier on in the day as our target, with a few other things in mind as well, or a few other targets that we could have in mind. So now we're going to go to the time frame where I actually used to be really scared of the 1 minute, and I realized just getting further in my development, I feel the most confident now in the 1 minute. Like everything's just the most refined. So it's just a lot easier to look at. But anyways, here we are. Okay. Optimal trade entry. Okay. What I'm looking at is the same thing. This, which isn't a setup, but this swing low, this high that's formed, that level of liquidity taken, trading into a discount. Here we go. 12:30. We're in the lunch hour. Okay. 12:57. Okay. This high created. Boom. 108. What do we see? We see an idea. Price trades above equilibrium, trades into a premium. But soon after, okay, right here at 130, okay, then trades and creates our setup. Okay, my entry would have been right here. I would have been tripped in either here on the left side with that wick, or with this larger candle here. Now, I would have traded that with the expectation that it would continue down here, because from here to here, which let's just go ahead and I can show you. Okay, so from here to here, there is a fair value gap, and we know when we have a fair value gap with a fair value gap below it, or we have two fair value gaps on top of each other, that we expect it to trade to that second fair value gap. Now, one thing that I took away from episode 6 was when he was talking about trailing your stop, or not trailing your stop loss, but where to put your stop loss in correlation with the fair value gap. And I don't know why I didn't retain this, but that's a big reason I'm going through. So the candle that created the gap would be the riskier of the two, okay? Or at least not necessarily riskier, but as a new trader would have a higher probability of getting stopped out. But funny enough, let's actually just look here. The low of this candle, 4010.75. 4010.75. So it literally just exactly hits it to the tick. And then we see that move higher, which we'll look at in a minute. And then the other place I could have put my stop loss, which could have potentially had a higher drawdown, but honestly, it didn't have a higher drawdown and would have just prevented me from being stopped out, would have been the candle, the first candle in the bearish fair value gap pattern. Okay. So anyways, boom, there's our entry. There's our stop loss. Okay, so we're entered in here. Where can we look for price to go? Well, first we have to look here. Okay, we have to look for example, here we have this. We could take this as a target. That would need to be repainted. Okay, we have this level of buy side. That's still from being tripped in here. Let's see how many handles that would have yielded us. Okay, that would have been only actually 6 handles. That's not good. Okay, or 6 pips. Sorry, not 6 handles. Or that's not what I meant to say. Sorry, I meant to say pips. All right. So from here, being tripped in here, would have taken it to here. That would have been 20 pips there. Just to that high. Okay. I'm gonna take that off now. So that's the only high probability setup I saw today. This like really very like back and forth here. I don't understand why it's doing that during New York as of yet. This is not considered a high quality setup. This is right next to premium and a discount. We have that displacement move, retrading to the imbalance before then continuing higher, where we have our target right here. Okay, and of course then we have the high of the day that's created. But obviously, how's one to know that it would trade so high? So I feel like I'm being kind of ranty just because of the time. It's literally 12:49. But again, one of those things is I'm just kind of done hating myself. I have 6 months for this. I have 6 months to do this, or sorry, 5 months. I have 5 months to do this, and I have 5 months to learn and keep growing. And the biggest things I just want to add to this video, to the end of the video, to clarify things I learned from episode 6 were how to use a fair value gap for stop loss placement, or where you put your stop loss, what 930 means in regards to in sometimes or in some cases being the 930 creating the false move of the day, which is very important when we look at time and price. Not always the case, however. And then also, again, just his reiteration too of the smart money paradigm, or talking about unwilling and willing/unwilling liquidity in the market, and how a lot of people don't have this kind of understanding. And I really also enjoyed what he talked about in regards to the levels of displacement, or where you look to find this fair value gap, or where you look to find that displacement within these setups, and how the energetic move or displacement is what's important here. So I'm going to leave it off at that. And yeah, see you guys later. Peace.